All right, welcome back. So in this video, we are going to finish up the steps in the adjusting process. Okay, so the adjusting process is made up of 3 steps. We've covered the first one already, which is to prepare adjusting journal entries. We talked about what they are, when they occur, and did examples of the 5 types of adjusting journal entries. After we prepare entries, just like before, you always post after journalizing. So we are going to post those adjusting journal entries to our general ledger. Just like before, whenever you post, the next step is to prepare a trial balance. Prepare. This time, it's an adjusted trial balance. So the trial balance we prepared before was actually an unadjusted trial balance. Okay, because it's prepared before the adjusting process. Okay, so we covered those journal entries, adjusting journal entries. Now we're going to review them with the next exercise, as well as illustrate the posting and finally preparing that adjusted trial balance. So go ahead and download that example I have for you, which is Ch4 Consulting Company. I'll pull up my copy here as well. So we're going to work through the adjusting process with this example. Ch4 Consulting, which is owned by Cat Bialik, works with local offices to introduce felines into the workplace. Cat believes having cats in the workplace reduces employee stress and brings healing and positive energy to the environment. Cat has the following unadjusted trial balance at year end. Okay, so that's provided for us. So we're at this step here. We're provided with the unadjusted trial balance, and we're now going to be asked to work through those steps in the adjusting process. Some additional accounts that might be used during the adjusting process are as follows, and they're there for you along with their chart of accounts numbers. They all must have 0 balances, otherwise they would be shown up here. All right, at year end, an analysis finds the following to be true. Okay, and so right away we're going to see some terms that we realize, oh, that calls for an adjustment. Supplies left on hand. That means we've used some supplies for that first one. We have to figure out how much has been used because we know that equals expense. Sometimes they give you the amount used, sometimes they don't, but you can solve for it. So let's see what we start with. Minus what we use equals our ending balance. Okay, so go up to your unadjusted trial balance. Supplies started off with an $850 balance. Okay, so we started with $850. We don't know how much we've used, that's our unknown, but we do know that we end what's left on hand. That's another way of saying, at the end of the period is $550. So solve for X. So your usage is 300. So that's how much we're going to put into expense. Now we know that we always increase an expense and decrease the asset. So you can prepare that journal entry. I've provided a template for you on the following page. Supplies, expense, and supplies. $300. To adjust for supplies used. Now let's talk about this reference column. Okay, we use it when we post. We know that we're going to have to post as part of the adjusting process. So what you might actually want to do first, depending on your comfort level, is remember all those beginning balances that we were given up here from the unadjusted trial balance. You might want to kind of skip the journal entries and go right to the general ledger just to put in the beginning balances. So if you scroll down a little bit, I gave you that general ledger, so you can start to fill in your different accounts. We have AR, we have supplies and prepaid insurance, supplies, prepaid insurance, equipment, prepaid insurance, equipment, Okay, so go ahead and fill in your T accounts. Go ahead and put in the chart of account number as well. I'll pause here and quickly do that. That way you don't have to watch me set it all up, and you can do the same. Okay, so I brought in the chart of account numbers for those assets. You're going to have one new account 111 for accumulated depreciation. In case you're wondering where I got that, it was given here under the additional accounts. So what I'm doing is I'm just trying to do all the assets and contra assets first. Okay, now I'll bring down all of my liabilities, making sure to include any new ones. Try that. All right, I've opened up the rest of the T accounts. And again, I took it straight from the unadjusted trial balance and the additional accounts below. And I kept it in numerical order by chart of accounts numbers, because that's going to make our life easier when we get to this 7th step of preparing the trial balance. Okay, so I've just set up the T accounts. I haven't put in any of the beginning balances yet. Okay, so make sure yours agree. If you got them a little out of order, that's fine. You can draw a little arrow or something like that. Now we'll go up. All these beginning balances they gave you in the unadjusted trial balance, go ahead and put them in. Okay, so cash, for example, 7255. So scroll down to your cash T account, 7255. Okay, and if you want, again, the beauty of those T accounts is they can be as detailed as you want. So you could label it as your unadjusted balance if you would like. Okay, so go ahead and put in your beginning balances. Some won't have any, right? If they're accounts just used in the adjusting process, like accumulated depreciation. So if you want, you can put a 0 beginning balance. That way, at least you know that you checked, right? So I'll go ahead and plop in those beginning balances. I'll pause my recording. You can do the same, and then we'll check when we come back. All right, I've entered beginning balances, the ones that were either provided from the unadjusted trial balance, or I put 0 in if they are only used again in the adjusting process. They didn't have a beginning balance. All right, so now I've set up my T accounts. I'll go ahead and post that first entry that we did, because again, we journalize and then we post. So let's go ahead and post. Okay, so $300 is going to go to supplies expense. So scroll on down to your new supplies expense account, and we'll go ahead and put 300 on the debit side. And if you want, you can say adjusting journal entry. That way we know that $300 came through the adjustment process, not through the original recording process. And that's account 605. So you go back up here to your journal. They can find that $300 in account 605. Supplies, you will move to the credit side. 300. That came from your adjusting journal entry. This was our unadjusted balance. We don't have anything else hitting the supplies account, so I'll go ahead and solve our ending or adjusted balance. This is our adjusted balance of $550. And we can double check, because problem told us that we should be left with $550 at the end of the period. That's what's on hand. Nice. So we have journalized and posted that first adjusting entry, journalized and posted. Go on to 2. And again, if you want to pause the video and try these, that's a great idea. And then you can just kind of fast forward and see what I get. The insurance policy above, which I think was for $600, represents 12 months of coverage, 12 months. So how much do we pay per month? $50 per month is used up. We just bought it this month, so we have 1 month of usage. Okay, so $50, usage equals expense. So $50 is going to move to an expense account, specifically insurance expense. And prepaid insurance is the credit, since we're reducing that asset. to adjust for insurance coverage used. We don't have to repeat December 31st again since it's all the same day. All right, now we post insurance expense, which I think was a new account. So it's down here, $50 through the adjusting journal entry. Okay, and then we reduced prepaid insurance by $50. We're not going to have any more activity in that account, so I'm going to go ahead and solve for our adjusted balance, $550. Well, it's a coincidence, isn't it? Two 550s. Okay, so this was posted to 106, and insurance expense was posted to 606. Okay, and you might have noticed, 05, 05, 06, 06. That's not a coincidence. Normally, the company, when they set up their chart of accounts, they know that these two accounts are related, right? So that they'll try to match them up like that. Okay, good job. Try the next one. Equipment. I'm just going to put my accounts down. As soon as I see equipment and I'm at the end of the period, I know these are my accounts. Depreciation expense and accumulated depreciation. Now we'll solve for it. Okay, so we remember our formula, cost divided by life. Okay, cost divided by life. It's going to last 5 years. 5 years. Let's figure out the cost. It's not given here in number 3, but if we just scroll up here, we can see the cost. So that's $3,000 because this is the depreciation expense per year. And it says we've had it for the whole year from January to December. So we'll use all $3,000 to expense. Now we post. Depreciation expense, $3,000. And accumulated depreciation, $3,000. Good so far. Great practice for our adjusting entries. 1/3 of the unearned revenue has now been earned. We've got to put it to revenue. Let's figure out what 1/3 is. Unearned revenue times 1/3. What you get? $650 has been earned. We know the journal entry is to decrease the liability, so debit unearned revenue and increase revenue. Let me see what they call the revenue account. I should be consistent. They call it service revenue, so I should call it service revenue as well. Service revenue for $650. $650 to adjust for unearned revenue, now earned. Now earned, or you can say earned during the period, something like that. And we post. So decrease the liability by $650. So $1,300 is left. That's our adjusted balance. This was our adjusting journal entry, and this was our unadjusted balance we started with. And we got to put it to revenue. 650 adjusting journal entry. Okay. 2, 3, 4, 1. Nice. Unpaid interest. So if it says unpaid, we know we're in the realm of accruals. We're talking about an expense, so it's going to be an accrued expense. We debit an expense, credit a payable. Let's see what they have. They have an interest payable account. We will use that, and they have an interest expense account. So use that. interest expense and interest payable to accrue for interest on loan. We have a bank loan. And the interest was $75 that we owe for the period. You've journalized, now post it. Interest payable is now 75. Interest expense, 75, for a total of 900. So we moved it to account 603 and 205. They usually match up, not always. All right, last one, completed but unbilled work. Totals 4,300. Okay, it's completed, means earned. Gotta put it to a revenue account, and we gotta show that our customers owe it for us. So revenue and AR. So AR, service revenue, to adjust for completed but unbilled work. Unbilled work. And it's a pretty sizable amount for CAT, 4,300. Want to make sure we record that. So let's go ahead and post it to AR and service revenue. 4,300. 4,300. Okay, and you can even label these. We said the nice thing is you make it as detailed as you want. So the 650 came from, which journal entry was that? That was the journal entry number 4. This is journal entry number 6. Okay, let's total up our revenue account. Let's see, 24,281 is what I get. Adjusted balance. Yep. All right, so let's post that last entry that we just moved. So we had 4,300 going to AR, which is account 104, and service revenue receiving the offset. Okay, so now you're all done with your adjusting journal entries. Woohoo! Okay, so we prepared them. We even posted them. So now we're going to prepare the adjusted trial balance. Before you can do that, we need to finish up the general ledger. You have to calculate your ending balance. And I've been doing some of them as I went along, right? I still need to do AR. So 6, 1, 5, 6. Remember, one of our rules for adjusting entries is that cash is never touched. So that's why you have the original balance there from the unadjusted trial balance. Let's see, there's your ending balance. Most of them didn't have too much activity, so easy peasy. Okay, so just make sure you have your ending balance for each account. I like to double underline it so I know that's the one I'm looking for when I prepare my trial balance. All right, done. Now you can prepare your adjusted trial balance. So go ahead and write down all of your accounts here in the order of their chart of accounts number. Okay, and then bring forward your ending balance. Let me do cash first to show you. So cash is account 101. You can go back to your T account. The balance is 7,255 on the debit side. Okay, so in the debit column, it's going to be 7,255. Dollar sign on that first number of each column. Go ahead and try it on your own. I'll pause my video here and fill it out while you do the same, and then we can compare. All right, so you should have the following individual balances in your debit and credits. I was just going to say there's 2 points to be careful. When you transition from debit to credit the first time, when you go from your asset to your contra asset, and then when you go from revenue to expenses, right? Students sometimes forget to switch columns there. All right, total it up. I got 40,591 for your debit column total and 40,591 for your credit. And these should always match. That makes you happy. Okay, and then the format $ and double underline on the last figures of the column. Yay, you did the final steps in the adjusting process. You've done your preparation of adjusting entries, your posting of them, and then preparing an adjusted trial balance. So those are the 3 steps in the adjusting process. The next step is one you've seen before. Don't worry. It is to prepare the financial statements. You did that in chapter 2, right? So I encourage you to try preparing the financial statements for CAT Consulting, right? On your income statement, you need revenue and you need your expenses. The nice thing about that adjusted trial balance is it organizes it all for you. You know exactly what your figures are going to be. When you get to your statement of retained earnings, we have our beginning balance right here. Okay, looks like they didn't have any dividends, so that's one less thing for you to worry about. And then when you get to your balance sheet, you need to have your assets and liabilities along with your equity balance. All right, so I encourage you to try just to make sure we can still prepare those financial statements. I'll go ahead and do it for Cat Company as well, and I'll post those as a solution file for you to pull down and compare to later. But congratulations, you have now gone through your steps in the adjusting process. You already know how to prepare those financial statements, but go ahead and do a little bit of a review, and you're done with chapter 4. Yay!